thank you to organizers and especially to Sebastian for being a great host, very friendly, and it's a big pleasure for me to be here to understand where the market goes and just to know about your country, about the region, so pleasure for me. So first I would like to start about our company because many people actually ask me what we are doing, what is our business about. So we are a fintech company. Actually I heard that you say fintech. In English it's a fintech, so fintech is fintech is the young industry, and we started to work in the fintech 5 years ago. At this point of time, it was not even fintech. Fintech as a word appeared in 1-2 years later. We are a venture capital fund. So venture capital fund means that we invest into startups. So we provide money. Money is, of course, the most important things for young companies, but we also provide some kind of acceleration services. So we help startups to grow, to develop their business, to go to the new markets, to launch new products. So this is kind of, we are friends of startups. We started 5 years ago. By the way, I'm Russian, living now in Singapore, so excuse me my Russian accent. 5 years ago, we have been based in Moscow, and we saw that there is a, let's say like the new market of financial technology, of innovations. And we tried to incubate, our first investor was one of the largest banking group in Russia. And they actually, the idea was to incubate, to grow some innovative technology inside the banking group. And we looked at the market, and in Russia at this point of time was no any kind of startups technology. That is why we started to invest into leading at this point of time companies in United States and Europe and try to bring the technology to Russia. So that was our first fund, Life SREDA 1. We have invested $40 million into 13 companies. Some of them are quite known today. At 5 years ago it was small startups, but today they are quite famous in fintech, like Simple Bank, which was acquired, it's a digital bank acquired by BBVA Financial Group from Spain, into the direct competitor Muban, by Brad King. I saw his face. Yeah. I didn't understand what was this about, but I saw him here.
In Chile, July 19.
Okay.
Brad King will be Chile.
Yeah. So he's our friend, and we invested at seed stage when it was a small startup into his company. We invested in the first digital bank in Germany, Fidor, which is last year was acquired by biggest French banking group. SumUp is a card acceptance startup, which is now very successful in Brazil. We did not invest into any Latin America startups, but SumUp acquired another competitor, Pay11, and now it's one of the biggest fintech startups in Brazil. That was our first experience, but 3 or maybe 4 years ago, we understood that the highest potential for fintech is actually not in developed countries, but in emerging markets like Asia, like Africa, like Latin America. And we moved our company to Singapore, and we shipped all our operations to Asia. And we invested into 8 companies to date in India, Vietnam, Philippines, Singapore, Thailand. Our team is based in Singapore, and actually all our focus right now is in Asia, and I will explain why later. Last year we also started our new initiatives, investments into blockchain, which is quite, noisy word today. So blockchain is like the future of finance, many people say. There is no business in the blockchain right now, but everyone expects this. We also produce a lot of analytics, research, articles about financial technology, about innovations. We have this report about fintech, money of the future. So if you are interested in this industry, you can download it from our website. And our friends from Fintech Alliance, Rodrigo is here, so they recently translated it into Spanish. So you can go to website Finovista, Finovista, yes, sorry, and you can download it in Spanish and read about numbers, trends, forecasts of the financial fintech industry. Oh yeah, so we have several accelerators for young startups. It's not our core business, but besides investments, we do some kind of acceleration of young startups in Singapur, Russia, and Malaysia. Okay, so that was short introduction about ourselves. So once again, we are doing this for 5 years. We invested into 21 companies across the world in most of markets of presence, and today I will maybe share our experience and vision of the financial technology industry for the future. So that was fintech when we started. Fintech is a quite new industry, maybe 5-6 years old, and it was started in the United States. And you know that United States is quite developed financial and banking industry. There are 7,000 banks in US. It means that people have financial services, people have financial products. And what fintech startups did, they just improved what already exists in US. So how to make better customer service, or maybe better design, which is acceptable by millennials, by the youth generation, which use Facebook or Snapchat right now. So that was fintech, which was okay. I mean, it's the right movement to improve, to make better customer experience, to make better interfaces. But that was not, from my point of view, like what fintech should be about. So fintech today, or fintech like the most potential, has the most potential in emerging markets. So fintech actually creates the new market. It doesn't compete with banks or with other companies. It doesn't disrupt. It creates the new market. And it happens right now in Asia. Asia is a benchmark today, not for emerging markets, but for the whole globally. Asia is #1. So Asia today is a benchmark, not United States, not Germany, not United Kingdom. It happens in Africa. In Africa, it's a bit different from Asia. So in Asia, it's dominated by tech giants, by Alibaba, by Tencent, by Bingan, by big internet giants. In Africa, it's dominated by mobile operators, by telecoms. So everyone who has a SIM card today, I have been, actually it's my photos, it's not from internet. I was two weeks ago in Rwanda, in Africa, and everyone who has a SIM card in Africa now has an access to most of financial services, payments, money transfers, even loans. And you don't get it from bank, you get it from mobile operators, which introduce their financial fintech products. And fintech comes to Latin America. I don't know, to be honest, frankly, I don't know much about this market yet, but I know a few companies like Nubank, like our portfolio company, SumUp, which are already successful here, and there is a big demand, there is a big potential for fintech development in this region and in Uruguay in particular. So today, fintech, if we talk about size, if we talk about number of companies, number of users, money invested in the fintech, emerging markets, Asia, Africa, and Latin America are bigger than developed countries, than developed markets like United States, like Europe. And that is the first time. Before it was not like this. It happened in 2016. So that is distribution. So fintech today is dominated by Asian countries, mainly by China, by India, Singapore in particular, but Singapore has some challenges, and I will talk about this later. So, and I believe that Singapore is a good example of some good things that they do, and as well as some bad things that they do. So, why fintech happens there? I believe that there are two main drivers for fintech development in emerging markets. Number one, just number of people who doesn't have an access to financial services, so-called unbanked or underserved clients. Asia, as you can see here, is of course number one by number of people and number of unbanked people. Africa and Latin America are second and third. That is why the potential is here. This is first part. Second part is about adoption of new technologies. So, younger population is in Asia, is in Latin America than in developed countries. Younger population use new kind of technologies and services like e-commerce websites, smartphones, mobile internet. And these are the key drivers for fintech development. Because when you buy something online, let's say, you need to pay for this. And of course, it's much easier to pay with digital payments, with digital, let's say, with banking cards or something like this. So these are two drivers why in the long run, fintech in this region will develop faster than, let's say, in Germany, who are very slowly to adopt new technologies. So that is how fintech in numbers look like in Asia. When we moved to Singapur here, that was about like 5 to 10% of the market. During these 3 years, it raised by 7 times. So today it's almost 50% of the global market. So the dynamics is huge. We need to understand that it's not like in the future fintech will come to our life. It happens really fast. And in 2 years, probably financial market in Uruguay will be completely different from how it looks like today. This is really a very fast market. These are the biggest fintech companies in the world. When I started to work in the fintech industry, all of them was from United States. The red is United States. But today, the biggest companies are from Asia. You can see the green color is Asian fintech unicorns. So that is how the market changes. It changes really fast. Okay, so quickly about maybe some verticals within. So what is fintech? Yeah, I repeat this word again and again. What is fintech? So the easiest part is payments. Payments is like how you pay or pay in the store or transfer money. If you are a business, how you accept money, how your clients pay to you, online, offline. That is different solutions that exist. And the biggest payment companies are in China today, China and India. So 2 years ago, it was completely different. Today, in 2 years, 90% of payments in China are processed by 2 companies, WeChat and Alipay. So only 2 years ago, it was completely dominated by banks, and today 90% belongs to 2 tech companies. How it happened so quickly? Basically, it was WeChat, which is Messenger. Yes, it's like Facebook plus WhatsApp. They did a simple thing. They explained with very simple product how to use electronic payments. So in China, there is a tradition that you present money during the New Year week to your friends, relatives. Sometimes they send and they use paper envelopes to send money. And this is a tradition that exists many years. So you have, let's say, 10 relatives, 20 friends, and you need to send all of them money in the envelope. So how it looks like, you go to the store, you buy this, you get this red envelope, then you go at home, put some money into the red envelope, then you go to the post, and you have to send to 20 directions these envelopes. Some of them are stolen, some of them just lost, and this requires a lot of time. So WeChat did a simple thing. They just introduced in the app the opportunity to send it digitally. So you just need to top up your wallet, and you can send to any of your friends how much money you want within 1 second. And this is for free. So and of course, WeChat doesn't make money out of it. The idea was simple: to explain people that they need to move from cash to electronic payments. And now they have like 200 million clients who are using their payment system for everything. So you can go to any store, you can pay with NFC chip, with QR code for any goods. 2 years ago, it didn't exist. Today, it's hundreds of millions of clients. Next one is a famous example of peer-to-peer marketplaces. I don't know if you know what it's about, but in a simple word, so there is a bank which, traditionally, which takes money by 1% and then lend money by 12% or 20%, depends on country. So peer-to-peer means that if I want to, technology allows me to borrow your money directly without the bank. Because technology can do the same which what banks is doing. So that is peer-to-peer marketplace, and the most famous company is Lending Club, which actually is like fintech started from this company. So that was so-called disruptor of banks. Today also was mentioned Sophie. Yeah, so Sophie actually also one of the most successful company in this segment. By the way, they don't provide only loans for students. Now it's a full range of products. It's like a bank. So let's compare Lending Club and Lufax, which is copy of Lufax in China. They started. Lending Club is already old startup, 10 years. Lufax started 5 years later in China. They just copied the same business model. So today, as you can see by numbers, Lufax is 9 times more expensive. By valuation of the company, it's an $18 billion company in comparison with $2 billion of Lending Club. It already has more clients, and actually it's already originated more loans. What does it mean? That Lending Club was a good idea, and it is a great company. But Lufax did the same business on the market, which has more potential, which has more demand, and that is why it's growing much faster and it gets more successful. InsurTech. I have some problems with this. Sorry. InsurTech or insurance tech is another industry which it's a part of fintech. It's how to digitalize insurance companies. They started again in United States. All the technology came from the United States, but the biggest company is John Gunn from China, which copied the same product, the same business model from United States, but they did it. Execution was better in China. I don't know if you know what is InsurTech, but in a simple words, let's say you buy something online, and with one click of your mouse, you can get insurance for this product, let's say for iPhone. So before, in China, insurance market almost did not exist. And this company made it simple. You go to another country, you can buy online insurance. Or you buy any kind of goods, even small goods, you can get small insurance for this. And big data and scoring, which is another big thing for developing markets. So what is big data? And in fintech, quite famous vertical. So basically, in developing markets, most of people doesn't have access to loans, to credits. Why? Because banks cannot understand, will this person pay back this loan or not? Because they don't have credit story, credit history. They don't have credit bureau. And that is why these companies started to use alternative data. How your behavior in social media, in Facebook or somewhere else, your payments online, even how you charge your phone. Actually, if you know how they use this information. So if your phone never goes down, if you charge it regularly, it means that you are quite responsible person. And if you charge the phone like in a proper manner, it means that you will pay back the loan. Something like this. What is interesting here again, the most interesting company here is Cezanne Credit from China. This is, I don't know if you know the movie Black Mirror. So there is one series where there is an app which that has a score of every person, like social score. Here is like 3.7, and depends on this score, it means how respectable you are in society and get access to different services, government services. Actually, the same already exists in China. At least it started last year. So basically, you get the score. If you post in Facebook, or they don't have Facebook, if you post in WeChat something good about the government or about some Chinese brands or about your friends, your score gets high. If you post some bad things or you talk even with bad people with low score, your score is going down. Based on this, you can get access to loans in banks. But this is first step. They actually, if you have higher score, you can get better position in the job listing, or you can get better access to some faster access to some government services. So that is another example of how that was adopted in developing countries. Okay, so that was about Asian market, and so that is why money now can go to Asia. The green is the biggest investment deals last year, and half of them happened in Asia, half of them happened in the United States. And there is one deal, which is Nubank, which is from Brazil. Yeah, I put one slide. I don't know a lot about Latin American fintech, but these are numbers of the market. Yeah, it's as you can see, one deal in Asia was $4.5 billion, and the whole market in Latin America is 20, 30 times less. However, the potential here is big, is great, and yesterday it's a very small portion of the volume of the global volume. But as I mentioned at the beginning, because of the number of people, number of unbanked people, the money will come here, the companies will come here. Actually, already there are 700 fintech startups in Latin America. All of them are small, but the question that some of them will become bigger and will do what already happens, what I already told about China and India and other Asian markets. Okay. However, investments in Latin America are even bigger than in Southeast Asia. Southeast Asia are Singapur and countries nearby, like Philippines, Vietnam, Indonesia, Myanmar, Thailand. Altogether, they have 700 million people, and most of them are unbanked. Seems that it's a very big market, however, numbers are different. Many people ask me about Singapore and what's actually happening in Singapore. You can read a lot of articles about different events, conferences, awards. You can see this is Fintech Festival, which was like with a lot of people participating there. There are a lot of initiatives, some of them right, some of them good. And in many articles you can read that Singapore is #1 fintech hub globally, or maybe top 3 fintech hub globally. Numbers are different, and I will talk about this later. But in general, the idea that Singapore is doing marketing right now, it has some good things because it unites ecosystem. Many new players come to the industry. Many players trying to relocate their business from Asia, or even from Europe to Singapore. But it's just the beginning. Don't think that Singapore is like a mecca for fintech startups. And actually, many governments trying to copy Singapore's approach to fintech startup. It happens right now in Malaysia, in Thailand, in Hong Kong, in Korea. Everyone started to talk about fintech. Talking is like in our industry maybe the most important thing today. So that is like like a picture of the industry. The reality is that fintech in Singapore, as well as in all countries nearby, is twice less than in Africa, less than in Latin America, and it's dropped in the last year. So it's actually even less than 1%. It's 0.5% of the global volume. And it's not because there is no startups. There are actually many startups. Even in Singapore, there are today about 200 or even 300 startups. The same amount of startups in Brazil. But Singapore is 5 million people with small market, and in Brazil it's 200 million people. And the same amount of startups. So why? That is not the problem. We have a lot of startups. The problem is that all of them are very small. Actually, they are like seed stage or Series A. It means like small team, almost no operations, maybe just launched product, nothing serious. They are like students that came together. Because of this, what I mentioned about this PR, about this marketing, about some small grants from government. But it's not the companies which I showed from China, which actually disrupted the market. It's just some initiatives, let's name them like this. So why it happened? Why we have so many fintechs? Actually today it's even 500 or more, and all of them small. Fintech is regulated industry. Fintech is a part of financial and banking world. It means that fintech has to be regulated. And sometimes it can get a license, like it happens in Europe, in United Kingdom, but licenses do not exist today for fintech startups, and in Asia at least. And that is why they have to work with banks. They have to integrate their products with banks and actually use the infrastructure. In Asia, it's very difficult to work with banks. It's really a nightmare for any startup. So this is like how general journey of fintech startup looks like. I talked about with maybe 200 or 300 startups, all of them tell the same. So to start to work with bank, you have to talk to CEO, like some head of bank, or maybe C-level guys, head of innovation or head of strategy, just to get the approval that they want to work with you. And it's very difficult because of bureaucracy. Banks are big in Asia, and it's very difficult to find a contact with the right person. You can spend 3 months or 6 months just trying to reach these people. Then, even if you find this agreement with C-level guys, you have to go next to some kind of IT director or chief of innovation. Usually people who are more on the ground and who will integrate your solution with the bank. And that is another problem, because this guy, it's like head of IT, maybe. Let's name him like this. He has his own duties and actually KPIs and bonuses, annual bonuses, which are linked to his core duties, not to startups. So he's not motivated to work with startup. And actually it's dangerous for him, because if startup is successful, he gets nothing. If startup fail and some clients, the bank lose some clients, so that is the duty of this guy. And then you spend another 3 to 6 months to explain this person that your solution is secure, safe, and he doesn't have any risks, etc. Okay, you come here to the last stage, which is real integration of your product with the bank. And that is the most difficult part, because banks in Asia, at least, have IT legacy of 20 years, 30 years. This is like very old solutions with no APIs. Integration with them is a nightmare. So that is why you have to go to really dedicated servers to plug in your solution, and it's not safe, it's not secure, and that requires another enormous amount of time. So what does it mean? That startups take money, let's say from our fund, venture capital funds, or angel investors, and spend this money just to launch their product, not to develop the business, just to go all this way. And what happens that in Asia they spend 80%, 90% of their resources just to launch the product. And when they launch, they run out of money and they have to raise new money, but they have no business to raise it. The difference with United States or with Europe or with United Kingdom is that banks there are more developed, they have more advanced infrastructure, they have APIs. Sometimes they have so-called bank as a service, and I will talk about this later, which allows startups to launch much faster their product, and then they spend their resources to develop the business. That is the difference, why European startups become successful and most of Asian, Southeast Asian startups are not. And second challenge is that even if you are successful, let's say in Vietnam, and you launch your product in Vietnam or in Malaysia, then the market is small, the economy is small, so you have to scale. You can stay in India or in China or in United States for many years and become successful because of the size of the market, because of the number of people, growing economy, but you cannot stay in Malaysia and become successful. And fintech is a part of digital world, digital economy, so there is no fintech standalone in Singapore and fintech standalone in Uruguay. It should be like it should have no limits, no geographical limits, and you have to scale. But when you go from Singapore to Indonesia, you have to repeat the same, find bank, integrate with the bank, spend resources, and that is really hard. But in Europe, for example, which has unified regulation and you can passport your license or integrate with the bank, it happens much faster. That is why such companies like number 26 and 26 today easily scale from one country to another one. So that is the reality of fintech in Southeast Asia. It seems that I blame banks that they do not support fintech startups with their development. In reality, for a bank, it's also not so easy. Look at the market today, like hundreds of startups. With whom to work? Who is good company? Which is not good company? With whom to integrate? Which there are 20 verticals. Hundreds of startups. It's quite difficult for a bank to understand in this ocean. And who will be responsible for this? Who will integrate these startups into core banking? Who will help them with business development? It's not banking business. That is why they are slow, they are conservative, they are not open for these new players. And this is not only for fintech startups. This is for any kind of non-banks who want to launch their financial services, like e-commerce. Many e-commerce giants want to launch their wallets. They need license, they need banking infrastructure, and that is why they need these messengers who wants to launch money transfers between users. Telecoms, like it happened in Africa, where they work with several banks. So, what is the solution for these problems, which I just mentioned? What should banks and regulators do to make it successful? In Europe, most of you know, I believe, that there is a regulation like PSD and now PSD2, which has a common standards for all countries and which push the banks to open their APIs, which means that banks from the next year have to work with each startup which approaches to them. And it already happened in the United Kingdom, where there is an open banking standard which push banks to integrate the technology API layer and open their APIs for third-party players, and 80% of customers already switching from traditional banks to startups. Due to this changes in regulation, banks in Europe, banks in the United States became really active in fintech. 60% growth in terms of the number of investments, integration of products. They understand that the new era, the new world has already come, and they cannot skip this fintech way. And it's better for them to work with new players, to integrate with new startups, than to compete with them. It can be, partnership can be like by integrating, by just working with different startups, like crowdfunding platforms where banks can lend money or where they can send their clients. It can be direct investments. So banks started to massively invest into fintech startups, and it is still, fintech is still financed by funds like venture capital funds, but banks are now active in the investment, and so investments starting to be like not competitive, not to invest into fintechs who compete with you, but into collaboration. So basically, banks invest into fintech startups in order to work with them in the future. And that is how the hype was in the fintech industry. In 2015, everyone started to talk about blockchain and about this new technology, distributed ledger technology, which will change the world. Last year, everyone was talking about artificial intelligence, chatbots, robo-advisory. This year, everyone started to think about open banking, about marketplaces, about platforms. This is the future of fintech. I will skip some slides, but bank as a service is actually the answer to my previous challenges for the market. Bank as a service means that there is a bank, but bank is not anymore some kind of front end who works with startups. Bank become a back end which support new players, support fintech startups, and provide an infrastructure. But fintech startups will be the front end who will work with clients. That looks like this. These are all banks, traditional banks. They still are in the game, but before they was like this, and now they become just a backend for new players. This is API middleware, so-called bank as a service, which allows these new players to easily integrate with traditional banks. That is the future of banking industry, how it will look like in a couple of years. Different kind of APIs, I will skip it. Why banks need fintech, I believe that it's clear. So fintech startups know how to better work with end users, with customers. They know how to adapt to the new digital era. They know what is demand of customers. They know what customers need. And that is why fintech startups open new niche, new markets for banks. Fintech startups go to unbanked markets, go to acquire new customers which are not accessible by banks. And of course, fintech startups also need banks. Fintech startups, they don't have so much trust. They don't know how to work with central bank. It's difficult for them to make compliance of clients, anti-money laundering. It's a lot. You need a lot of time. You need a lot of experience to cover all these things. That is why it should be successful partnership. That is the future of the market. It already happens. There are a few players, startups, bank as a service startups, banks which are open their APIs, and actually BBVA, for example, is a good example of bank which understand that for them the future is to work with third-party players, with new startups. And even regulators already understand this. So regulation is changing. Open banking comes to United Kingdom, to Europe, to Singapore, to Korea, and it will come to other markets. And of course it will come to Latin America in the near future. So BBVA, for example, several weeks ago, opened their APIs. So every startup can now work with BBVA core banking systems and launch their products. And what is important, this is our portfolio company in Asia. When I talk that fintech should be diverse, should be on not only like fintech in Uruguay and fintech in Argentina, but that fintech should be connected. I mean, fintech regions should be connected. This kind of bank as a service concept should be pan-Asian. So they should be platform should be connected with banks in this is Asia, like Singapore, with banks in Malaysia. So if I'm a startup, if I'm a fintech startup, and I launch my product in Uruguay, I should have an opportunity to scale my business easily with the same APIs, with the same unified APIs to the new markets, to Brazil, Colombia, and others. That is important. That is the next future of this concept. When regulation, when technology will be unified across regions, across countries. That already happening in Asia, and I'm sure the same will come soon to Latin America. Regulation is already, of course, it cannot happen without regulation changes, and it's already started in, for example, in Asia, which they trying to central banks in Asia trying to do the same what was done in Europe and the United States. Sometimes this is like example from another industry. Amazon, which you know, which is the biggest e-commerce marketplace. Amazon invested a lot into their IT infrastructure, servers, cybersecurity, engineers. So that they created a very big IT platform for their core business. In 2006, Jeff Bezos, CEO and founder of Amazon, decided to launch the new business, which was Amazon Web Services. And so basically it's to run the IT infrastructure to other players, to new e-commerce, small e-commerce stores, to different shops. And many people at this point of time told, Jeff, you're like crazy. You are supporting your competitors. You are actually providing them advantage that you have for you. And Jeff Bezos told that it's not the advantage. My advantage is product, how I work with customers, brand loyalty, everything, but not this infrastructure. And today, 10 years after, 67% of profits of Amazon belongs to Amazon Web Services. So basically, Amazon makes money out of their competitors. The same approach is for fintech and banks. Banks invested a lot into their core infrastructure, licenses, servers, core banking systems, processing centers, etc. Now there are a lot of new players with whom banks can make money. This is not the competitors. They will bring more business to banks. So instead of competing with them, banks should open their APIs, should open their infrastructure and provide it to these new players. And that is the future of fintech, that is the future of banking industry, which is already happening in many markets, and that will happen everywhere. Again, if you are interested, it was just a short introduction. If you are interested more, please download it and read. Thank you.